Good morning. For Traders Exclusive, this is George Kachuk with RCM Wealth Advisors reporting to you from the CME Group trading floor in Chicago. Here we are on Halloween. Happy Halloween, everybody. And actually, the markets are looking a little scary. Okay, I just had to say that. Okay, on a more serious note, there's some positive and negatives going on in the equity markets. So let's talk about some of the positive and negatives. Some of the negatives are that all the indexes now have dipped below their 10-week moving average. And usually a 10-week moving average is a sign of institutional support. And with the markets trading below that, it's a little scary. Now, it's not saying that one should go short in this market because it's still holding up support. Specifically in the S&P 500, it's holding up that 2120. That's the breakout level after the Brexit low. And the market's still holding up above that. So that's actually a very positive thing. The NASDAQ also, which was the leading index, now is below its 10-week moving average. However, it's still straddling that 5,200 area, struggling with that today. So we'll see how that turns out. Now, one of the probably biggest negatives is since that Brexit low, small cap stocks have been leading and outperforming the S&P 500, and actually now have been breaking down over the last 2 weeks and sort of broke a support level at the end of last week. So that's something to look out for. Some of the positives are that some of the leading stocks are still acting pretty well, and that's meaning they're near their highs. Stocks like Google, Facebook, Netflix, Amazon took a little bit of a hit after they reported earnings. It was down Friday, also below its 10-week moving average, but it's trying to recover this morning, so we'll see how that turns out. Also, when I talked about some of the smaller stocks, some of the smaller optical stocks like Lumentum, Fabrinet, ASEA Communications kind of broke down also. So that tells you that there might be a little bit of risk off. It's to be seen. It's not an indication that we need to go short yet, but it's just something to kind of keep in mind. Now here's some of the positives. Some of the positives are that the sentiment is really, really negative, and that's a positive because that's sort of what you need as a tailwind to the end of the year when everyone's really hating this market. Although we're just a few percentage points off its highs, that tells you that the sentiment's a little bit overdone. Also, we're heading into a seasonally favorable time of the year, November, December. Usually pretty good for equity markets. That's also something to keep in the back of your mind. And also one reason why I think this might just be a little bit of a correction consolidation in the U.S. equity markets is the foreign markets are actually improving. If you look at the DAX, the German market, or the FTSE, the English market, UK market, if you look at the Chinese stocks, they're actually starting to do pretty good. So now, if those were breaking down and the U.S. is breaking down, I would say there's something a little bit more serious. So, in summary, we have some positives and some negatives. Again, the negatives are that the indices are trading below their 10-week moving averages. The positives are they're still kind of holding on for support level. So just keep an open mind, and we'll wait to see how this unfolds. So as always, price and volume be your guide. This is George Kachuk for RCM Wealth Advisors, reporting to you from the CME Group trading floor in Chicago. Have a great trading week.